Today, a small inflation breather. Hello again, it's Martin North from Digital Finance Analytics, where there's posts covering finance and property news. Well, the monthly consumer price index indicator rose 5.6% in the 12 months to May 2023, according to the ABS data that came out today. And of course, the monthly one is the less accurate, simply because it doesn't survey necessarily the whole of the 3-month data set. But nevertheless, the story, of course, was played up as good news. This month's annual increase of 5.6% is the smallest increase since April last year, the ABS said. While prices have kept rising for most goods and services, many increases were smaller than we've seen in recent months. Now, of course, the CPI inflation is often impacted by items with volatile price changes like automotive fuel, fruit and vegetables, and holiday travel. So it can be helpful to exclude items with volatile price changes from the headline CPI indicator to perhaps get a better view of the underlying inflation. And when excluding those volatile items, the decline in inflation was more modest. The annual increase for the monthly CPI indicator was 6.4% in May. That's slightly lower than the rise of 6.5% recorded in April, and down from a peak of 7.3% in December 2022. As we'll see, there were a couple of items that really made the big difference. In fact, the most significant contributors to the annual increase in the monthly CPI indicator was housing, up 8.4%, food and non-alcoholic beverages up 7.9%, and furniture, household equipment and services up 6%. And partially offsetting the rise was a fall in automotive fuels, which was down 8%. They fell 6.7% in the month of May. The annual movement of automotive fuel remains volatile, partially reflecting price changes from 12 months ago. Annually, automotive fuel prices fell 8% in May, compared to a rise of 9.5% in April. The housing group annual increase of 8.4% was lower than the April increase of 8.9%, but within the housing group, new dwelling prices rose 8.3%, which was the lowest annual growth since November 21, as building material prices continue to ease. But rent price increases went up again, from an annual rise of 6.1% in April to 6.3% in May, as the rental market continues to remain tight. Food and non-alcoholic beverages rose 7.9% in the 12 months to May, and the main contributors to this increase were meals out and takeaway food, which increased from 7.3% in April to 7.7% in May, as the higher cost of ingredients, rents, utilities and wages were passed on. Prices for food products not elsewhere classified were up 11.5%, with bread and cereals up 12.8%, and dairy and related products up 15.1%, and of course they were significant contributors to the increase. The annual increase for holiday travel and accommodation of 7.3% is lower than the April increase of 11.9%, and that's the lowest increase for holiday travel and accommodation since October 2022. So to recap, the monthly CPI rose 5.6% to 12 months of May. The most significant price rises were housing up 8.4%, food and non-alcoholic beverages up 7.9%, and furnishings, household equipment and services up 6%. And we are seeing more wages flowing into the numbers because there is an underlying strength of services components within this category. For example, the lift in housing was centered on a 0.8% increase in rents in the month. That raised the annual rate from 6.1 to 6.3, while new dwelling purchases moderated from 9.2 to 8.3%. And if you think about things like takeaway food, then wages costs were also passed on there. Their service categories also included a strong and expected rise, but they were modest in terms of their contribution to the monthly indicator, including a lift in communication services up 0.8%, financial insurance services up 1.1%, and other recreational services at 1.7%. Now, I think it's worth highlighting the fact that this volatility that we're seeing in these numbers is going to continue. And of course, the electricity costs will come through in July, thanks to the next round of price increases. And in some places, we expect to see those up at 25 or more %. So I don't think we should be celebrating necessarily. It's worth saying, I think, that the positive drivers that we saw were pretty much anticipated, and The real news is probably still that inflation is still stubbornly higher than expected. Now, if you're buying your home in Sydney's contentious market, you don't need to stand alone. This is the time you need to have Edwin Almeida from Ribbon Property Consultants standing alongside you. Buying a property is both challenging and adversarial. The vendor has a professional on their side. Emotions run high, price discovery and price transparency are hard to find, and then there's the wasted time and financial investments that you make. Edwin understands your needs, so why not engage a licensed professional to stand alongside you? With RPC, you know you have experience, knowledge, and master negotiators looking after your best interests. So shoot Ribbon an email at info@ribbonproperty.com.au, and if you use the promo code DFAWTW/Martin, you can get a 10% discount offer.